Alibaba and Amazon operate on similar business models with similar business segments in e-commerce and cloud services. A lot of investors always ask me, which one do I think is the better investment? And so in this video, I'll answer that question. I'll compare these two on critically important financial metrics, including revenue growth, operating profit margin, and returns on invested capital. I'll also share with you my valuation calculations so you can see what I calculated as a fair price for these businesses. I'll also share with you the valuations on a forward price to earnings basis so we get another perspective on valuation. I'll do all of that in this relatively short video, so let's get right into it after a brief message from my sponsor.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So let's start with revenue growth over the previous decade. And we notice two things here. We notice excellent growth and the difference in size. Amazon generated $670 billion in trailing 12-month revenue in the most recent period. That's up from $107 billion in 2015. That's good for growth of 6x in the previous decade, or in other words, compounded annual growth of 21.3%. Alibaba has also increased revenues nicely, increasing to $139.7 billion, up from $11.7 billion. That's up more than 12x in that time, or good for compounded annual growth rate of 29.8%. But in recent years, if we look from 2021 onwards, Amazon's growth has competed against Alibaba. Alibaba has faced stiffer competition and its revenue growth rates have decelerated meaningfully. Amazon's growth rates have also decelerated, but they've slowed down and still surpassed Alibaba, which has generated several quarters of less than double digits increase over these previous few years, while Amazon has mostly grown revenue at least double digits over these previous few years, even though growth rates have slowed down for each of these companies. The next thing I wanted to compare them on is the operating profit margin. And Amazon has done a great job in serving customers more cost effectively. Its operating margins expanded to 11.4%, up from 2.1% in 2015. Meanwhile, Alibaba's margins have gone in the opposite direction, but they're still above Amazon. Alibaba once generated an operating margin of 31% in 2015. That's now more than halved to 14.3% in the most recent trailing 12-month period. And in recent quarters, Alibaba's management team has talked about how they're making large investments in artificial intelligence, and those investments in AI, and as well as their e-commerce business, they are making large investments there as well, have weighed on profitability. In their most recent earnings call with Wall Street analysts, Alibaba's management team said that they want to be the best experience for the largest customer base with the highest customer frequency. In other words, they're going after the most valuable customers in the e-commerce segment in the markets they serve, which they ultimately believe is an over $30 trillion RMB market opportunity for Alibaba. By the way, this highlighted conference call document I've made available for my channel members, and you can join for less than $5 a month. The next metric I wanted to compare these two on is the return on invested capital. And in this metric, Amazon has surpassed Alibaba at 13.7%. That's up from 4.8% in 2017. Alibaba's ROIC has fallen from 11.3% to 9.2%. But if we look back from 2022, the margins have expanded from 4.7% to 9.2%. And Alibaba's investments in artificial intelligence are already paying off. The company reporting several consecutive quarters of triple-digit growth in AI. So it's reasonable to assume that its ROIC will continue expanding. Also, Amazon has reported great improvements in decreasing the cost to serve customers in the e-commerce segment, especially as it's grown to achieve such size and scale that makes it cheaper to serve customers. If it's already visiting your neighborhood, it doesn't cost the company that much more money to deliver a package to your neighbor when it's already delivering a package to you. So now that we looked at the financial metrics, let's look at valuation. The fair value calculation for Amazon, which I just updated today and increased to $276 per share. The current market price is $238. Amazon stock looks undervalued based on my DCF. Looking at Alibaba, the intrinsic value per share at 155 compared to the current market price of 145. Alibaba stock looks fairly valued based on my DCF. Now, when I go to fiscal.ai, as I've been going to for these charts, and you can see their link in my description, Alibaba is trading at a forward price to earnings of 17.8, while Amazon is trading at a forward price to earnings of 34.3. Now, I have both of these stocks rated as a buy, and I like both of these investments. But if I was forced to pick only one of these stocks to buy right now at current market prices, I would pick Amazon. I think Amazon's business is better suited for the next few years, and I also like the lower risk profile of Amazon and the markets that it serves compared to Alibaba and its tenuous relationship with the Chinese government. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.